three main categories of market capitalization. Market capitalization is an important financial metric that measures the total value of a company's outstanding shares of stock. It represents the price that investors are willing to pay for a piece of the company. Market capitalization is calculated by multiplying the current market price of a company's stock by the number of outstanding shares. For example, if a company has 1 million shares outstanding and its current stock price is $50, its market capitalization would be $50 million. Market capitalization provides investors with insight into the size and value of a company. A company with a high market capitalization is typically considered to be larger and more valuable than a company with a low market capitalization. A market capitalization can be used as a benchmark for comparing companies within the same industry and is often used by investors to determine the risk associated with investing in a particular company. Companies with high market capitalizations are typically considered to be less risky than companies with low market capitalizations. Just a quick reminder to please destroy the like button and hit the subscribe button. Also, visit us at www.investmenttees.com and use code BLOG to receive 25% on your next purchase. There are three main categories of market capitalization: small cap, mid cap, and large cap. 1. Small caps. Small cap companies have a market capitalization of $300 million to $2 billion. These companies are often newer, with less established track records, and may be riskier investments. However, small cap companies also have greater potential for growth. 2. Mid caps. Mid cap companies have a market capitalization of $2 billion to $10 billion. These companies are often more established than small cap companies, with more consistent earnings and revenue growth. These types of companies may still have potential for growth, making them an attractive investment for some investors. 3. Large caps. Large cap companies have a market capitalization of over $10 billion. These companies are typically well established, with established track records and consistent earnings and revenue growth. They are often considered to be less risky than small cap and mid cap companies, but may have less potential for growth. Investing in market capitalization categories depends on your investment goals and risk tolerance. Small cap companies are often more volatile and risky, but may offer greater potential for growth. If you are willing to take on more risk in pursuit of potentially greater returns, investing in small cap companies may be a good choice for you. However, if you prefer to take a more conservative approach to investing, you may want to consider investing in large cap companies, which are typically less volatile and less risky. Mid-cap companies may offer a good balance between risk and potential returns. They are often more established than small-cap companies, but still have potential for growth. Investing in mid-cap companies may be a good choice for investors who are willing to take on some risk in pursuit of potentially greater returns, but who are not comfortable with the level of risk associated with small-cap companies. An investor can build a portfolio around market capitalization by diversifying their investments across small-cap, mid-cap, and large-cap companies. This can be done by investing in individual stocks, exchange-traded funds, or mutual funds that focus on specific market capitalizations. It is important for investors to conduct thorough research on the companies or funds they are considering investing in, as well as to regularly monitor their portfolio and adjust their investments as needed to ensure they align with their investment goals and risk tolerance. Conclusion: market capitalization is an important financial metric that provides insight into the size and value of a company. There are three main categories of market capitalization: small cap, mid cap, and large cap. Each category has different characteristics and may be more or less suitable for different investors depending on their investment goals and risk tolerance. It is a useful metric for investors to consider when evaluating companies and building a diversified investment portfolio. However, it should be used in conjunction with other factors and with careful consideration of an investor's individual circumstances and goals. In addition, it is important to note that market capitalization can fluctuate based on various factors, such as changes in stock prices, the issuance of new shares, and corporate actions like mergers and acquisitions. Investors should be aware of these potential fluctuations and regularly monitor their investments. Thanks for watching.